Nasdaq moved higher on good PPI after CPI was good as well, driving technology higher, playing a couple games off the open as we can see here, but certain technology stocks continued to push higher and we saw diversification. We're going to get into what sectors look ready to break out, what sectors usually start coming in at this part in the market, what people are focused on that they really should not be focused on, what names we should be focused on based upon earnings that look sustainable. While we're seeing diversification through very many sectors in technology now, we have a lot to cover. Let's get to it. Hey everybody, subscribe to the channel, click all notifications if you're interested in getting actionable intel before the next day. It's what we focus on every single evening and do the pre-market live as well every single morning. Now, if you take a look at the Nasdaq and forget that this is Nasdaq futures, would you think you're in a trading range? The answer is you would not think you're in a trading range unless you're going to go all the way back to here, right? So then you have to go to August. And I just want to point out the obvious and be Captain Obvious here. This is a 52-week high. This is where you're at. You are 2.5% away on the Nasdaq from hitting a 52-week high, okay? That is significant. That means that the Nasdaq will be at a year high. And people are still talking about the great crash that's going to happen and how the market's going to roll, okay? I've seen this play out several times, and it's why I hammer it home. People get trapped when they go through a bear market. If they miss the bottom, which very clearly, even if it drops a year from now, you have to say this is the bottom, right? You would have to say that this marked the bottom, that CPI. It tested twice and it held. It then made a higher high. That line became a battleground. That held. Now we're going higher and we're hitting highs. That does not mean that we're going to break through this and we're going to see this great rally. But when we just talk technicals and you look at this, it is very difficult for you to say from this low to where you're at right now, okay, which is 27%. You are technically not in a bear market the moment you break the 20% barrier. This is not in a bear market. The S&P is very similar. It is not in a bear market. It has not been. That does not mean you go up. Usually you form a stage one, which is where you bounce around and then very quietly you start moving. Now, I've heard it all. I've heard M2. We've heard that earnings aren't supposed to be where they are. Earnings are better than expected. So when we look at these charts, if we can just take a step back and really look at what's going on instead of telling the market what it's supposed to do, we're going to do better. So instead of me telling it what it's going to do, why don't I just watch what it's doing? And very clearly we are basing, we built a base, we broke out of that base, we retested, and now we're going sideways and we're trying to break out. As I stated last week was probably one of the most confusing weeks that we had. And you can even see that with short speculation. Now in front of us is the combination in blue of Nasdaq 100 Hedgers positions. This includes commercial, large, small speculators. Three separate sectors. The one that I'm focused on right now is small speculators. Small speculators are they're actually large hedge funds, pools of capital, and pension funds think large speculation. But if you take a look at the small speculation, you have multi-billion-dollar hedge funds that are included in that. Look at what transpired and how we sold down here. And we are net short right now in the Nasdaq as the Nasdaq goes higher. Now I want to show this on a 5-year, but now let's go here on a 10-year and just look at the sheer scale. And the only time we really had something like this was in 14, and we fell apart for one reason or another. Go out 15 years, and you don't really see much like this where you have this huge drop. Now you have something like that back here in 4/13/2010, right? About 13 years ago. But if you keep going back and looking for them, they're very, very rare where you see these huge drops. Now, what's interesting about these huge drops, if you're to mark off these levels, they usually go higher from there. If you take the drop itself and measure the drop, when you see this, they usually wind up going higher. And that's because they have to put the hedge back on, okay? Right now they are at, let's just call it, I think it's at least 15-year lows. So if you take a look at that, let's call it 15 years you haven't been at this level. Now, at the same time, let's talk about what's going on out there. New York Stock Exchange margin debt as a percentage of growth. We know this is on a 12-month rolling. So in other words, they're just taking the net over 12 months. But if we take a look at this and we just draw a very simplistic line, let's draw it from back here, but what we're going to do is just include it to here. And you can see that level right there. So that's going to be what we're going to refer to as the neckline that we're going to want to watch. What we do have here and what we should focus on is the following. Okay, I pulled back. I made a higher high right here. The first one that you've had. Okay, here you did not make one. Here you never came back. This is the first higher high that you've ever made in margin, okay, since 2021 November. Now, if we zoom in on this, what am I saying? Well, what I'm saying is this is where we cracked, right? And if you look at where you cracked around May when people started getting off margin. And then where was the peak? November. Okay, so what does that tell us that we have? That tells us that we have lag, right? Lag time. All right, so now we know we have lag time. So then we're watching this peak right here, watching the market come down, 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 higher high. And now we know we have what? We have lag time. So we know that we have to wait a couple months for this to even show up in the market. So we have margin debt increasing, and we have people completely, utterly out of position. And we have the Nasdaq 2.5% from a high. This is why I said last week, I found last week very difficult. And this is exactly what transpired. We came back down, and we should zoom in on this so that you see why I felt very complicated. I felt this was very complicated. Up, came down. And to me, it looked like we were not respecting, nor we were going to rally. And then we had some really good news come out and GDP. And we rallied on GDP, right? Now, when we rallied on that GDP number, it was something to see. It was pretty impressive, wasn't it? But when you see how we're coming back down, right, and then you're ripping on Friday, coming across here, and then we're waiting for what? Well, we're waiting for CPI. Okay, CPI was supposed to come in at 5%. There was an 80% chance it was going to come in 5% or higher. It came in at 4.9%. This is really important, okay? That 4.9% that it came in at, there was a 20% chance of that. So institutions were not loaded for bear going into that number. That means they have to step up their game. They have to get involved. And the question is, how long are they going to wait? Now, we're starting to see signs that they're not going to wait. We're going to get into a couple names here in a minute. But I want you to take away one thing. Just take this away. You are 2.5% away on the Nasdaq from hitting a high. You do not want to hear about the following anymore. You do not want to hear about M2, the PE's too high, okay? You don't want to hear any of that anymore. Earnings have to come in, recession, debt ceiling, all of that, it's all noise. Watch what the market is doing. And if you drill into this market, let me show you this on a 1 minute. These were the levels that we were looking at all day today in the community. And we also went through these levels, some of them anyway, pre-market. And I'm going to keep this on a 1 and zoom in so that you can see how clean this is. I mean, it is just absolutely glaring where these levels are. So this 13,347, call it 13,350. You can see that battleground in here over and over again. Draw the top here, and you can see the battleground here over and over again, right? Until it flips to what? Support, okay? So this is what's happening. They are walking us up over and over again. Now, I don't know what the catalyst is, and please comment below, because I'd love to hear it. Because I could be wrong, and if you've been following this channel, you know I've been wrong in the past. What is going to get us down? If it's not losing another bank, which is exactly was high on my list today. Okay, like it was really high on my list. I'm like, okay, we're going to lose another bank. We're finally going to crack. We walked through this entire chart this morning in the pre-market call, right? And how tier one and the point that I was getting at was tier one losses. Now we're going to lose PAC West, which is at the median line. And that should scare everybody. Now, if we look at how this is going, this is not going to be around. Now, WAL, I have a short position in that I've been holding, but they came out and showed their deposits today. And I could be on the wrong side of that. Now, we have to see how much interest they're going to get as a company holding the actual stock. People don't seem to want to hold the stock, but I could be wrong there. I mean, their deposits increased. It's exactly what you'd want from a bank. So if the banking crisis isn't going to get us, okay, well, what's going to get us? Well, we have a theme now, this AI theme. It's not going away. So we start walking through this and going, okay, well, here's AMD. Let's put some volume. So the volume's picking up on AMD. The earnings were actually halfway decent, but the guidance was so we sold down on the guidance. Then from there, just kind of going sideways, trading up, right? Now look at us. Okay, we're trying to form some kind of high tight flag here. You are seeing your blowups. But if we start looking at semiconductors, that's it. That's my pullback. That's my big pullback. I just rallied 28% from the bottom. 27, 28%. My pullback's that wonky doji. I think we're up more than that. Hold on one second here, guys. I thought we were up to 27 or 28% to the peak. Nope, 23%. So we're up 23% from peak. And this is what I'm going to get. This. Well, and people are going to say, well, you're going to reject here. You don't know that. You might think you're going to reject up here, but you don't know that. You don't know how this is going to play out. Historically, if you look at names like AMD, they benefit greatly from these DTLs. Matter of fact, it's very hard to find a stock that it acts better on DTLs than AMD, in my opinion. It's historically fairly accurate if you take a look at it. Stocks have personalities. They trade like the people that are trading them. So if you take a look at this, where's my pullback? Am I supposed to be upset that NVIDIA is down $3 today after hitting 290 again? Well, it didn't break. Okay, well, maybe it did. Maybe what you should be saying is it didn't break yet and it's giving me another opportunity to be in. You see, here's the issue that I see, and take this for what it's worth. As somebody that used to do this, you're telling the market what it's going to do, right? That's what newer traders do. They tell the market what it's going to do. They state that it is so obvious that this is resistance and that we're going to reject here, right? But at the same time, when we're down here, we didn't call the bottom, and now we're going to call the top. Calling tops and bottoms is a losing game. Your goal is not to be right. Your goal is to make money. And if you see a stock like NVIDIA, and you watch NVIDIA here, and you're watching what it's doing over and over again, well, you keep trying to get over certain levels, right? And then you just kind of keep rejecting those levels. But you're not making lower lows. Far from it. You're just riding the line. Now, of course, you can make lower lows, but what are you doing? 82? Okay, so what did we do? Came to 82, right? 282. And what did that do for us? Okay, that was resistance, wasn't it? And then what did it become? Support. So that's what you're seeing happen now. Supports are flipping, okay? We're seeing resistance points becoming support. We're seeing this in the market. Now, the SOXX in and of itself, could this look better? Absolutely. Let's clean this off and get into it. Could the SOXX look better? Absolutely. I have a position in the SOXX. I'm long the SOXX right now. I just want exposure to the entire market. So what's going to get this down? If AMD's earnings are not going to get this down, Lam Research had good numbers. ASML had good numbers. What's getting this down? Okay, so here's the outlier, and then you can see your range, right, since May. All we're doing is batting around, setting up to break out. That's where you're setting up. You can either get involved, right, or you can wait for the breakout, right? That's entirely up to you how you trade that. For me, I don't want to be buying SOXL or options up here. So yesterday I bought right here, and I'm more than happy with the trade. I waited for the gap fill and then the reversal and then got involved. I'm more than happy with it. Now, it's a really simple idea because if it breaks, it takes out a lower low, well, you know to get out of the way. But if you drill into even its competitor like SMH, right, which is another one, I think that's Van Ack. Yeah, we'll go here. Take a look at this on the weekly. Here we are on the weekly on the SOXX. You're in a kill zone. That has to do something. Instead of me telling it what it's going to do, why don't I just make a bet and then see what it does, right? Very different than telling it that it's got to break out. I don't know if it's going to break out. I don't have a clue. It should break out. You're starting to see demand pick up across all the semiconductor names, all of them, right? Here's a DTL here, ASML still battering that 650. Let's take a look at Lam Research, okay? And this is a day that we had a bad market for semis, right? We were down today in semis. So here we are, Lam Research, still riding the line, tighter and tighter and tighter and tighter, riding that line. So I would prefer not to say that that's going to break down. AVGO, these are all big names that are in the index. I keep riding the line. If I take a look at the wicks, which way are the wicks breaking? Wicks are breaking to the downside. I've got price rejection. So when I start looking at these names, even NVIDIA, maybe I don't tell NVIDIA that it's going to break down. When you look at this, what are you getting? You're getting a doji. Well, that'll make my life very easy next week if we wound up with a doji. 282 on the doji. You break that, you have an outside week. You know that you might, at that point, have an issue. But let the issue develop before telling it it has an issue. Very distinct difference, and it's very important to get that. And you place your bets accordingly. Now, some other names here that look like they're going to absolutely rip. CRM we bought in the Alpha Chasers community today. Paid $200 for it. We're up $3.50 already in it. This was really simple. I didn't want to chase. Okay, what I'm noticing is some breakouts are working, and I'll show you where those breakouts are working in a moment and what names you should be focused on for those breakouts. But if you look at names like CRM that are moving because Snow and ZS are moving, right? And you start seeing like more of the legacy names. That's how I refer to CRM. These kinds of trades, this is exactly what you want to see. You know where your DTL is. You know where you're at, right? So you know where your battleground is. Now for me, I have this one setup that I use, and I changed the RSI to something I use that's proprietary, but I'm not going to walk through all of it. But I'll just tell you this. I'll get rid of the vol here. If you look at this and you're overlaying RSI on these charts, and you know where your levels are, and this was just a real simple, very, very simple. I showed it to you here, right? Just a very simple DTL. And all I want to do is see how we react when we get to it. And how did we react? Resistance, resistance, breakout. Test of resistance becomes support. DTL is now support. Breaks down, flips. That was it. As soon as we closed over and went over, we put the trade on right around 200. And since then, it did nothing but go higher all day long. Now, does it come back and retest? I don't have a clue, but I have the right position. If I don't want to lose money, I can just put my stop at break even and now I've got a free trade, right? Or I can just leave the stop where I think it should be. Either way, I'm in because I'm waiting for pullbacks. That seems to be working best with the larger names. So today, ZS was something that I really wanted to get involved in, quite frankly, because I had a little FOMO and I'm sick of watching it go up. So I took a starter. Now, I buy the breakout of the starter, right? Guess what happened? Comes back down a little bit. Now, I still have the position on, and I'm going to build a position in some of these software names. But the point being, the larger cap names, it's not working. Look at Microsoft here. This was the huge entry today. We've had to position this for a while, but I'm going to clean this off and show you exactly how to do this so you can do it yourself. I'm just going to use a 5-minute chart. All you want to do is go out there and mark previous day close and 2 days out, and just look at where these closes and opens were, okay? Just start marking them off, and you'll start seeing how important those levels are, the opens and the closes of previous days. Look where you got to. Look where your RSI was when you got there. Okay, so now you know where that support level is, and that is a level of interest. Every open and close of previous days of the week, if you were a day trader, are levels of significance. The question is how significant, right? Same thing here. Even intraday, you want to give weighting to the front end. In other words, you want to give weighting to today more than you want to give weighting to Tuesday. But I sure as heck want to know where I was on Tuesday. And you can see that level and how we battled it. But what if you just used RSI? I did a whole video on RSI, and it's when I first started this channel. I think it's been a year and a half now. And when we started here, that's your signal. Where's your sell signal? I mean, it doesn't really get any easier, guys. So if you find something simple and it works, maybe do that. I'll do a whole new video on RSI now that I'm a little bit better with YouTube. I think I'm a little bit better, unless you're part of those pre-market live calls where I put the mic on mute, then you're probably a little frustrated, but it is what it is. So you're pulling back, you're running. Okay, so pullbacks are working on large cap names. Okay, you said you were going to show me where the breakouts are working. Okay, news-driven events, the breakouts are working. If you have a news-driven event on a small or mid-cap name, that's what's working. Okay, so this was something that one of the guys in the room has been trading. He got involved around 11 bucks. I mean, that's what's the great thing about the community. You know, I can't look at all 8,000 names. It's just not possible. So, they always come up with different ideas, names that I'm not paying attention to. My focus, you can tell by these videos, is usually larger cap names. I like liquidity. If you take a look at this, well, there's your breakout on the hourly. If you bought the breakout, did it work? Yeah, it worked. Okay, here's the high. Here's the pullback. What happened when you broke out? Worked. So when we broke out today and that happened, knowing that this is working with these kinds of names, I had a trade. I had a real simple trade, made a couple bucks, and I just blew it out. But this looks exceptional while I'm at it. This is what you want to see. Now, the RSI is absolutely insane, 87. It's not sustainable. So it might go sideways for a little bit and work off. But you're seeing these names. Do not rule out these names. Pharma needs to buy companies. Big Pharma needs to buy companies. They need a new stream. This LEGN, 64 secondary, one of the guys in the room was buying this. This was perfect. Came right to that 64, 65 level, ripped. Now you're at all-time highs. Look at this weekly chart, okay? And that leads me to what is going to work here. Now, in June 2nd, remember this, I think it's June 2nd and 6th, and we're going to do a whole video on this. ASCO is coming out, okay? ASCO is a oncology conference. It is the global oncology conference where people go over their oncology drugs. It's coming out in a couple weeks. You want to be aware of it. You want the list. You want to know what names are coming out. You want to know when they're presenting. You want to know what they're looking for. You will never see more moves in biotech than you will see the first week in June, which I believe it's the first week in June. I'll get the exact details. Now, ASCO, you can just Google it. Now, look at XBI. Well, that doesn't really look like much. No, it doesn't. But what it does look like is it looks like I'm finally over that 50 on the RSI. It's looking like I'm curling up here. So maybe I have something to work with, right? So I'm starting to drill into this and look at it. I don't care about this little pullback. It is what it is. Pullbacks are healthy. Come back. Maybe we're a little overbought. I looked at this LABU. I've had a position in this since last June. I think I paid like $480. I'm still in the darn thing. So here we are, right? You're setting up. If you break through this 9.25, 9.5, 9.30, somewhere in there, okay, that has massive potential. Okay, massive potential looking at these names. What sectors are not going to go up in the current climate that you're in? Energy is toast. Okay, energy names are going to continue to drop. They're going to continue to come in. You should be selling the rallies on the energy names. Okay, as they start cutting production, that means that they know that we have less demand. If we have less demand, energy names are not going to go up. They don't have pricing power. It's really that simple. So covered a lot of ground tonight. Please comment on this. As always, I look forward to your comments. And if you find value in this, please share it on social media. It's really important to me that people learn what it takes to truly be successful at trading. Have a good night, everyone.